This is the Apollo Hospital daily time frame chart. Apollo was in the strong consolidation, and then one fine day it broken the range and started going up. This is the range where it broken from the consolidation and made a big move till here, right? Price action trader, what he will do, he will see where is the support and resistance. So he will mark that level thinking that when price comes back to that level, he will take a long trade because that is where strong support. Let us see what happened after that. And you can see that after that price started coming down, and he thought it will come to his level and he left him and started going up. So he did not come back to his support only and he missed the opportunity. So is there any way to know that this is the place where exactly this Apollo Hospital stock would have taken support and started going up? Yes, there is a way to know, and that is the smart money concept. That means he will use a indicator called volume profile indicator, and he will draw it from one swing to another swing and he will drop it, and he will go to the volume profile and he will see where is the highest volume bar here at this price range. And you can see that that is where exactly Apollo Hospital took the support and started going up, right? So price action trader would have waited here, but smart money concept trader, he knows that how big players they play in the market, where they place the big order, and by plotting a volume profile, he came to know that this is the place in this range big players place the big order. And this is the another example of Wipro daily time frame chart. It was making a consolidation, and one fine day it started breaking from that consolidation and started going up. Being a price action trader, what you will do, you will see where is the strong support. You see that this is the strong support. You will draw a horizontal line and you expect price to come here and take support, and then you think that you will take a long trade. You can see that after that, though price started coming down, but it did not come to the level where you were waiting to take a long trade, and after that price started going up. Being a volume profile trader, what he will do, he will draw from this swing low to this swing high, and he will look at the profile and he will mark where is there is a highest volume. You can see that highest volume somewhere here, right? So that means when price comes back, this is the place where it is likely to take a support and start bouncing. Now this is another example. This is the Grasim Industries daily time frame chart, and you can see that it was making consolidation, and one day it broken that consolidation and started going up, right? So again, what price action trader will do, he will mark the level here. So let us see what happened after that. You can see that after that price started taking support somewhere here in this region, and after that price started going up. So by understanding volume profile, what you could have done, you could have drawn from one swing to another swing where is the highest volume bar. So you can see that somewhere here there is a highest volume bar. What you could have done, mark that level and wait for price to reach that level, and when price comes to that level, most of the time price can take support. And this is the one of the concept of our smart money concept which we have included in our new swing trading course which we are launching tonight. And volume profile is one of the smart money concept. Like that, there are many other smart money concept which we have included in our new swing trading course, and we have total 15 strategies for swing traders on various concepts. And in this video, as a part of gift for my YouTube subscribers, I am sharing one of the strategies from my swing trading course. Now let's go to my presentation and let us see what is this concept is all about. Before you understand this concept, you have to understand how big players trade in the stock market. That is what called smart money concept. Smart money concept is somewhat like advanced level of price action trading. So this is the one layer above the price action trading. So if you want to understand this concept, then you have to understand the basics. If you want to trade like big players, then you should know that how big players trade. They place orders in millions and billions in quantity. Their orders are in millions and billions because they have big money to place the order. Next one is they don't place limit order, but they place market order. But same time, they don't place all their big orders like millions and billions orders at one go. Rather, what they do, they place large orders splits into small numbers of orders for large period of time. sometime even from few days to even few months to few years. Okay, so that means big player want to place 10 million order, okay, some XYZ stock. Assume that that stock is trading around 100 rupees and he wants to place that all 10 million order at 100 rupees. Okay, now just assume that if he has to place all 10 million at one go, you know what happens? Immediately from that level, one big candle happens. As he is placing order, it becomes big candle. Why it happens big candle? You know that every buyer need a seller. If he wants to place 10 million order by order, then he needs somebody who is selling 10 millions of sell order at 100 rupees, right? If he wants to buy at 100 rupees, then somebody should have this big orders. But you know that he will not get the fill if he place all 10 million. 1 million may get at 100, another million maybe 105, another at 107, another million at 108. Like that order get filled, it based on bids and ask, right? Wherever there is a order, sellers are waiting, he will get filled. So that is what happens. Instead of buying at 100 rupees, he may end up buying at 110, like that, right? So what he will do, assume that day one he will place 20,000 order. Day 2 he plays another 10,000. Day 3 he plays 20,000. Day 4 he plays another 10,000. Day 5 he plays another 15,000. Day 6 he plays another 15,000. Like that he will keep doing it, and that is how big players they place small number of order for large period of time. Okay, sometimes from few days to weeks to months or even years. So that is what happens when you see that you bought some stocks, and after you buy the stock is trading sideways and you think that it's so boring. Every stock is going up, my stock is not going up, right? You think that almost 3 months I bought this stock, but it's stuck in the same range. One day it goes 2 rupees high, next day it comes 2 rupees low, right? 6 months, even sometime even 1 or 2 years also, you will see that the stock is not going anywhere, and one time will come after that that stock will start flying, right? So after a long period of time, sometimes it can be few days, sometimes can be few months, even sometimes can be year or two, it will start making consolidation and then it start flying. Because if retailers know that some big players accumulating the stock at this specific price, they will also jump into it, right? Retailers also jump into it, and when what happens, before his 10 millions order gets filled, it starts going up. Now he will not get all 10 million order at this price. So that is why big players they want to do it silently so that retailers will not come to know. So that is how smart money concept works. And what happens after that? Once they place all 10 million order, 10 millions, I'm just giving you example. Okay, it's not exactly 10 million, it can be anything. Okay, and after that all 10 millions order get filled, then they will take market up. And once the breakout happens, what happens? You will see one bullish candle breaking that consolidation after few months or after few days, and then retailers jump into it. When the retailer jump into it, price will start going up. And another thing is that they will start adding to their position when stock is going up. Unlike retail traders, normally retailers what they do, they bought a stock at 100. When 100 rupees goes to 90, they will add to their position. When the stock will go to 80, they will add to their position. When the stock will go to 50, they will averaging to their losing position. That is how retailers do. But big players, they will do the opposite. They will add to their position when the stock goes to 110. When that stock goes to 120, they will add to their position. That is called pyramiding or adding to their position. And the strategy which I am going to discuss today in this video, it's based on where they will accumulate to their long position, where they are accumulating once price starts going up. That is what we will use that method to know and trade accordingly. Now, what are the rules for this strategy which we are going to discuss now? And the rule number one is you should only look for uptrending stocks. Okay. So on daily time frame, you should only look for uptrending stocks. Second rule is look for stock which made a big move on upside after some accumulation or reaccumulation. That means you should look for a stock which made a consolidation sometime and then made a big move. This kind of stocks you should look for. Next is once you have marked the level, for example, this stock was in the consolidation and around this level it started going up. Okay, it made a swing high here and then price started coming down, and you have to mark the volume profile from this swing low to this swing high. That means beginning of move to extreme end of the swing. Okay, That is how you have to plot the volume profile and look where is high volume nodes. If high volume nodes at middle or bottom of the profile, then it is strong support, and most of the time price can move from that level. That means, so this is the stock, okay, it started big move. So you identified that this is the swing low, this is the swing high. From there price started coming down. Now what you will do, you will go to volume profile and you will mark volume profile from this level to this level, and you try to understand where highest volume node. If you see that this is where highest volume node, that will tell you that when that stock was going in a strong rally, this is where big players added to their position, and most of the time price have tendency to bounce from here. Most of the time, okay, not all the time. Just like any other strategies, this is also probability. And what I said, you should look for the highest volume node at either middle, somewhere like this in the middle, or sometime you may see that highest volume node at the bottom, okay, somewhere here you may see the highest volume bar. So that means big players have added their long position somewhere here. So if price comes back to that level, then chances that this is where price might take support. But same time, if you see that highest volume node somewhere at the top like this, then you should avoid that trade, because if you see that highest volume at the top, that means that is the place maybe they are offloading their long position. So that is why I have mentioned that if a high volume node at middle or bottom of the profile, then it is a strong support, and most of the time price can bounce from that level. So since now you have understood the basics of smart money concept, now let me take you to the presentation of my swing trading course, and let me share the first strategy of swing trading course. Okay, and this is the strategy number 1 from our new updated swing trading course, and the name of this strategy is accumulation pullback strategy. So this setup based on our smart money concept of accumulation zone and volume profile concept. Here, select daily time frame chart and mark huge uptrend after the accumulation or reaccumulation zone, and mark from one extreme swing to another extreme swing on the chart. For example, you can see that this chart from here, it made an extreme swing. For this setup, you need extreme swing. Extreme swing means price will make some consolidation and then suddenly start going up for few days like this, right? So mark the profile which has a high volume nodes on middle or lower side of volume profile. That is what we discussed. Once you mark the volume profile, if there is a high volume nodes at the top, then you should ignore it, because it is more likely that big players are offloading their position. That means they are selling their position which they bought at the lower level, right? So either high volume node should happen at the bottom or should happen at the center. So in this volume profile, you can see that highest volume node is here, right? And mark that high volume bar top and bottom, and that is where we expect price to take the support on pullback or retracement. So this is the Hiromoto Corp extreme swing from here to here, right? So what we have done, we have plotted the volume profile from this swing to this swing, and where is the highest volume node? Highest volume node is here, right? So we mark that level and we expect price to come to that level, and when price comes to that level, we will take a long trade based on price action pattern. For example, taking a long trade on daily time frame sometimes can be a little bit confusing. So for that, what you can do is you can go to 15 minutes time frame. This is the 15 minutes time frame chart, and the day when price came to the high volume nodes, look at the volumes on volume chart. Whether that day had a some extraordinary high volume compared to left, that means there are high number of buyers are buying on that day. So wait for price to close above that high volume node level. Here you can see that volume is highest but closing within that volume node. So next day also it is closing within the volume node, and this day it closed above the high volume node. That is the day you can take the entry, and your stop loss could be below this swing low. That is how you can go to 15 minutes time frame to time the entry so that stop loss will not become too big. This is the next example. This is the Havels India. So you can see that from here it made a huge swing high from this low to this high, right? This is the daily time frame chart. and we marked from one swing to another swing. And when we plotted volume profile where we have seen highest volume, we have seen the highest volume here. So what we'll do again, we will mark that highest volume bar high and low, and once price comes and reaches that level, that is where most of the time price can take a bounce. And you can see that this candle exactly took the support from that high volume node. So again, what I said, you have to go to 15 minutes time frame and see the price action pattern. So you can see that on this day, exactly it took the support from high volume node. It made a total V reversal. And then look at the volume chart. Volume is good on that day, though not extraordinary high, but compared to left, volume is similar, right? And the second thing is that, and that day it closed above that high volume node levels. So you can take a long trade at the end of the day and keep the stop loss below that swing, below that volume node, and you can take a long trade. That is how you can mark high volume nodes on daily time frame, and entry can be done on 15 minutes time frame. Here I'll show you how to plot the volume profile, because in last video few people requested to show them how to plot volume profile. This is the TradingView. I'm using TradingView, but if you are using other software, then you have to check how to do it. For example, you can see that Nifty made a strong swing from here to here, right? Now I want to know, in this swing, where big players added to their push. If you look at only price action, you will not come to know where exactly they have added. So for that, I will go to a indicator called volume profile. For that, I already have it here. I made it in favorites. Go to indicators, go to technicals. When you go to the technicals, there are 4 options. You have to click on profiles. Okay. So if you click on profiles, it will tell you about the many volume profiles, but the one which I am showing you here is the fixed range volume profile. Click this. Once you click here, keep your mouse here on one swing low and drag it to where is the swing high. So you can see that you want to see till this swing high, it will show you the profile, right? It is showing you that highest volume bars here, right? On the top I said you should ignore it, and then you can come here and mark that high volume bar, and this is the high volume bar on your Nifty daily time frame, and you can see that this is where exactly Nifty took the support and started going up. And that's about this video about one powerful swing trading strategy based on smart money concept. As I said earlier, volume profile is not only the smart money concept. There are other smart money concept also, which we have included in our new swing trading course. There are total 15 strategies based on various concepts. And if you are interested to learn all those 15 strategies, then you can go below this video in the description section and check our swing trading course and go through the content section, go through the FAQ section, and if you are interested, you can enroll for it. And that's about this video as a part of our swing trading video series, and I'll see you soon with a new video. Until then, bye and take care.